All right, what's up, everybody? Now, before we dive deep into the charts and those fancy technical ways to make living from Forex, we need first to understand what we are dealing with. We need to understand what is Forex exactly. This is what we'll be talking about in this video. This is first video in the series of videos introducing general knowledge about Forex. So consider subscribing to the channel just if you haven't, so that you will be notified whenever the other related materials are available. Okay, let's dive deep into this material. So let's begin with a little bit notion about Forex. Forex is basically the short form for foreign exchange market. This market is run in a system that is called over the counter. Basically, this means that there's no physical location or exchange center for the market, but rather everything is run electronically. As of definition, Forex is a global financial market that allows us to trade currency. We are trying to make some profit from buying and selling dollars, pounds, euros, and other currencies. For this to occur, each currency has a given value related to another currency. This is basically called exchange rate. It wouldn't be a surprising fact to state that most of us has participated into this big market, willingly or unwillingly, in one way or another. Let me try to give you a small simulation of an example of a person participating in the Forex market, and eventually we will have some grasp of how even we make profit from Forex market. Say you are traveling from England to United States. As we all know, as a general knowledge or a quick Google search, local currency in England is pound. So you are traveling with £100 cash. Eventually, before you enter into the United States, you will find a Forex bureau or an office at the airport or anywhere else and exchange your pounds to United States dollars. So let's say that at that moment, the exchange rate is 1.3 GBP per USD. This means 1 pound is equivalent to $1.3. Immediately, you will receive $130 to travel with in the United States. Okay, so you have done all you want to do and it's time to return to England. Unfortunately, you have never used the $130 you had. Maybe all the expenses were covered by a friend, you were visiting there or something. Like the same exchange procedure will be conducted once you are trying to return. However, lucky you, on return, now the current exchange rate is 1 GBP per USD, meaning $1 is 1 pound. You will receive 130 pounds. From this, you make a profit of 30 pounds and you become happy. However, it doesn't always go your way. Let's say you returned while the rate is 1.50 GBP per USD. Then you will receive 86.7 pounds, making a loss of 13.3 pounds. This doesn't reflect exactly the profit that you get in real life or the loss, as there are other factors that determines the amount you receive, like the charges, the spread, but nevertheless, this is a simplified example of what's happening under the hood. You may be wondering, why Forex in the first place? Why do I have to trade Forex? Well, you can trade other too, but here are good reasons to why you should trade or you should consider Forex. Forex is the biggest financial market in the world. It has a huge number of participants from major banks to retail traders. Each day, around $7.5 trillion are traded in the Forex. So with this comes a huge amount of liquidity, which we will discuss later. This brings a huge amount of short-term business opportunity for interested parties. As a comparison, stocks like New York Stock Exchange, which is the biggest stock exchange, only have $20 billion traded per day. So you can see that volume in Forex is so high. Last but not least, Forex is almost traded the entire week. Market is open Monday to Friday, 24 hours a day. All these factors show that Forex is a good deal in trading. Don't worry about the keyword that you don't understand. You will gradually understand them along the way with me. All that is traded in Forex is money or currency. A currency shows the economy of a particular country it represents. So buying a currency, you are buying basically a piece of ownership in that country. You are just like a person buying shares in the company. If the economy of that particular country lies, you make the profit. The newest currency so far is the Zimbabwe gold, made official by 8th April 2024. Therefore, exchange rates reflects one country's economy in relation to another. In the world of currencies, we have what we call 8 major currency. These are the 8th most traded currency in the world. They are from countries of large economies. These currencies include US dollars, pounds, euro, yen, Australian dollar, Swiss franc, New Zealand dollar, and Canadian dollar. However, some traders refer to Canadian, New Zealand, and Australian dollars as commodity currency, but that doesn't change anything. For us, we stick with naming all of them as major currency. Let's talk a little bit about currency naming. Currency are named by 3 letters known as ISO 4217 currency codes. This was set by International Organization for Standardization in 1973. The first 2 letters means the country name the currency represents, and the last is the name of the currency. It is mostly the first letter of the currency name. For example, New Zealand dollar are NZD. You can see NZ means New Zealand and D means dollar. USD for US for United States and D for dollars. Japanese yen, GP for Japan, and Y for yen. Each currency, especially the major currencies, has a nickname that is common to most of the traders. For example, USD is known as bark, Euro is known as the fiber, Great Britain pound is mostly known as the cable. And we have many nicknames among the traders. But these names, we won't be using them among our videos. So you are free to make Google research and get yourself informed about them. Let's talk a little bit on how currencies are bought or sold. Currencies are quoted in pairs. For example, Euro USD or GBP Japanese yen, meaning Great Britain pound to Japanese yen. This means that if you buy one currency, you are eventually selling the other. Though there are hundreds of currency pairs, not all of them are traded in Forex market. In fact, we only have 3 types of currency pairs among Forex market: major, close, and exotic currency pair. Major currency pair always include US dollar, and they are the most traded. Simply put, it is the 7 major currencies paired with US dollar. So we have 7 major currency pairs. Close currencies, on other hand, they don't include the US dollar. If you have close currency pairs between 2 major currencies like Great Britain pound and euro, this is referred to as major currency pairs. Though these currency pairs are not traded as major currency pairs, their volume is also notable. Lastly, we have exotic currency pairs. These currency pairs consist of one major currency and another currency from emerging economy like Brazil, Mexico, and others. They are not traded a lot, so they don't have high liquidity. Most of the trading that happens in Forex is at interbank level, and it is termed to be interbank market. Big companies and banks are the ones to participate at this level. However, this doesn't limit others to participate. As the system is over the counter, anyone with an internet connection can participate. This creates different classes of Forex participants that we'll see in the future video. US dollar is the most traded in Forex, whereby around 84.9% of all transactions consist US dollars. The reason is that all major currency pairs consist of the US dollars and they are the most traded. Moreover, around 62% of all Forex reserves or assets held by central banks in different countries exists in dollars. Last but not least, it resembles the largest economy in the world, so it does make sense for being the most traded. The euro follows the competition with around 39.1% of the transaction, while the yen, which takes the 3rd position, takes 19% of the all transaction. It is a fact that most of the transaction happens by speculation. This means that people are trying to make a profit from a small move of the market in a short period of time. This renders the market with a huge amount of volume each time. Hence, this brings the reason behind the huge market liquidity. Forex market is huge and liquid. This means that currencies are easily bought and sold without significant impact on the price. This, we have come to the end of our video. Please remember to stay with us by subscribing to this channel. If you got some value from this video, please remember to like, share, and comment to this video. Thanks for watching. See you in my next video.